Welcome. In this video, I'm going to show you how to determine the Forex market direction. As a day trader, you are supposed to know, which direction your market is going, the direction so that's to know the type of trades you are to take. You know, if the market is going bullish, I think you should only be taking, buy trades, and if the market is going bearish, you should only be taking sell trades. And then for you to know, the direction the market is going, so as to have a higher probability of having successful trades, you should be able to know the direction the forex market is going. Okay, so with that said, let us look at JPJPY, GBB, JPY, JG, and we are going to look at GA, which is GBB AUD, and we are going to look at US 30. You know, we are just going to look at how to determine, the direction of the forex market. Okay, so what you need to do first is you need to come to your daily time frame, and then zoom out, and for you to actually know what is going on in your market. So if we look at this market now, um, we see that majorly the market is going up bullish. If you look at here from here, if we take a trend line, you see that the market is going up like this, and then from here it goes up like this, and from there it becomes steeper. It goes up like this. You see, you see that the market from here it was steep going up, and then from here to here it was becoming steeper, and you see that the likelihood of the market still going up. Okay, so that is on our 4. Then you go down to your 4 hours time frame, to check what is happening, because what you just did is to look at long term, then we look at a shorter time, and then we look at a very short term with a lower time frame, so that we know exactly the direction our market is going. So if you look at the 4 hours time frame, it actually agrees with our 1 day time, our daily time frame. You see the market is still going up, and that is just it. So if we go down to 1 hour time frame, then that is where we actually get this very particular trend, right? This very particular one, right? So if you put the trend line there, you see that the market is actually, and if you put another trend line here, you see that it's even becoming steeper and steeper, and going up. So we have already established that our market is bullish daily time frame, 4 hours time frame, 1 hour time frame. Even if we go down to 15 minutes time frame, we see that it agrees with our market bias. So what we just need to do is, at any particular time, we take our position. If we look at this 15 minutes time frame, you see that um the market is, whenever it comes to the time frame trend line, you take a trade, a buy trade, or you just at a 4 hours time frame, you know where your point of interest is, you take it, and then when the market comes to that place, or you go down to 1 hour time frame, you know where your point of interest is, maybe probably here. When the market comes down here, you take a buy. The market is still here, and probably when the market hits the trend line again, because it has touched it, 1 2 3 4, 1 2 3, want to, so it all depends on how, because how to take your trade is not within the scope of this video. All we just need to, what we are just looking at is how to determine the direction of the forex market in this video. Okay, all right, so let us go to GPB AUD, uh, GPB AUD. Okay, so we go down to the daily time frame, and then we zoom out to see what is actually going on. On a daily time frame, we can see something like this. That is what we are seeing. On a daily time frame, we are seeing higher highs. See, higher high. No, we are seeing lower highs, lower high. We see low, lower high. We are seeing lower high, lower high, lower high, lower high, or higher lows. No, sorry. We are seeing higher lows. This low, higher low, higher low, higher low, higher low, higher low. So basically, we are seeing, a bullish direction on our daily time frame. Then, if we go down to our 4 hours time frame, we look at what we are seeing on our 4 hours time frame. We want to determine, this is what we are seeing, or we can do something like this, and then then if we go down to our lower time frame, 1 hour time frame, this is what we are seeing. We are seeing something like this. You understand? So on our 1 hour time frame, that's our lower time short time frame, we are seeing, bearish markets. But on our long term time frame, that's 4 hours daily, we are seeing buys. Then on our 1 hours, we are seeing sells, bearish market. So how do we take our trades then? Since on our 1 hour we are seeing bearish markets, then if we go down to our 15 minutes time frame, let it open. Okay, if we go down to our 15 minutes time frame, then we zoom in into the candles, to know what is going on. Or we zoom out to know what is going on. You see that, the market is bearish, but yeah, bearish, but with caution, you know bearish with caution. Why did I say with caution? Because you know um the market is choppy at best. It's trading within a range. If you look at it, you see that uh, it's trading within a range, between that range and this range. Between this range and this range, that is what the market has at best been trading on. So that is why I said it is choppy at best, and you should just be careful. So what you can just do here is, since on a 15 minutes time frame it is bearish, so you look at when the market comes to the higher, like this trend line that is being rejected, you take a trade around the top of the range, and then take it down to the low of the range. That is just the best way to trade out this market. Then okay, so we go to US 30, because sorry, why it is like that is, we see that the shorter time frames are not corresponding with the longer time frame. Like our day and hourly time frame agrees, but 1 hour day, our daily time frame and 4 hours time frame agrees that the market is still bullish. But our 1 hour time frame and 15 minutes time frame is saying that our market is bearish. So that is why um we are looking at, since the market is ranging, it's not really trending. We are looking at taking our trades from high to low direction. From high, we are taking our high, our trades from the top of the range down to the low of the range. Okay, right. So where you go to US 30, we want to determine the direction of the market. Then we need to zoom out our candles, then go to 1 hour time frame for us to know. On our 1 hour time frame, we can see this is what we can see. We can see bullish markets. We can see bullish markets. Okay, bullish market. That is the only thing I can see. It's a low, low, higher low, you know, and it has touched the trend line 3 times. Okay, and then if we go down to our 4 hours time frame, um, this is what I can see. I can see this, you know, which is still bullish, agreeing with our daily time frame. Okay, let us just zoom into it a bit. Then if we go to our 1 hour time frame, our 1 hour time frame agrees with our 4 hours time frame. You can see the market comes here. um well, let me just draw this properly. Okay, on our 1 hour time frame, this is just what is there, so that we can. Okay, so our 1 hour time frame, this is what we see. Okay, the market has touched here and touched here, and then it's still going up. So if we go down to our 15 minutes time frame, 15 minutes time frame, we zoom out a bit. So our 15 minutes time frame is agree with our 1 hour time frame, but if we zoom it into a bit, then this is what we are seeing. We are seeing something like this. Okay, so all bullish. So what we are saying is that as the market is still, bullish, all we are just looking at is determine where your point of interest is. As you can see here, like here now, you see reaction at this point. You see that there is reaction at this point, and the market is, has retraced back to this point. All I will just do is wait for whatever the market here. If it gives a rejection candle, a kind of rejection candle here, I'll take the trade, go up. Or you better still, you wait for another zone and see what happens there. That is just here. We are just to look at the direction of the market. Then we have looked use this. So in order to just do an overview, what you just need to do to determine the direction of the market is to, depending on the type of trader you are, to start from either your monthly time frame, weekly time frame, daily time frame, hourly, 4 hours time frame. If you are a swing trader, or if you are a day trader, you take it from daily time frame, 4 hours time frame, hourly time, 1 hour time frame, and then 15 minutes time frame to check the direction of the market. And that, if all corresponds, like if 15 corresponds with 1 hour and 1 hour corresponds with 4 hours, you know that okay, this is actually telling you, the bias of the market or the direction the market is going and all. But if they don't agree, you use your lower time frame, actually 1 hour, to know your short term. This is what I mean by short term, is you are not looking at leaving the market. Probably you just do your day trade and get out. So your 15 minutes time frame should be able to help you know, okay, on the short term, this is the bias of the market, or this is the direction the market is, going. On a short term, if they don't agree, I mean, if the higher time frame are not agreeing with the lower time frames, then you use the lower time frame and be cautious and know that okay, the market can go back to the direction of the higher time frame. So that is it, on this video to on how to determine the direction of the forex market. If you find value in this video, kindly like it so that other people can see the video and then benefit from it as well. Then subscribe to our channel so that when I make similar videos you can be notified about it. And then switch on your notification button so that the notification can come when I do other videos. I want to thank you very much for giving me your time, and take care and God bless.